Hi, and welcome to the Stock Scores Market Minutes for March 26th, 2018. This week's topic, plan the trade and trade the plan. You should not be thinking during the trading day. You do your thinking when the market is closed and create a plan for how you will trade different situations. You go into the trading day with that plan in mind, and during the trading day, apply your plan based on the information that the market gives you. Make sure your plan is based on good analysis so that you have confidence in it when it's time to trade. All right, let's get into this week's analysis. Of course, we had some pretty good selling pressure this week, and that all started with the break of trend line, which we had 5 or 6 days ago, right there. And then we had a little flag pattern, and then Thursday and Friday, that acceleration to the downside of the selling pressure, which has now taken prices quite far below the downward trend line. You see the space here up to the short-term downward trend line. That means we go into Monday being quite oversold, but still in a downward trend. So we have to say it's pessimistic, but also due for a bounce. Now looking at the long-term chart, this is the weekly chart of the SPY, I have drawn that long-term trend line and we're right at it. And so there is a good reason for the market to bounce here because it has fallen to that support. However, I've talked a number of times in recent weeks about the falling top forming, and we now have that falling top. So we've got a falling top, and we are threatening that long-term upward trend line, which, although we may pause for a few days, I think it's quite likely that we will ultimately break that downward or that upward trend line. So you want to watch real closely because it's not going to take a lot more weakness for the trend line to be broken. Moving along to the small cap sector, it actually looks better than the large cap. We've got that long-term upward trend, quite well intact no matter how you draw it. But a lot of that is simply because these stocks have not participated in the bull run like the large caps have. So they're not as much of a high flying stock, and therefore they don't have as much downside. And I think we're going to see some money rotate into the small caps as long as they can hold their upward trend line. Moving along to the Canadian market upward trend line broken as well on Thursday. And we have gone through this horizontal line of support. Next line of support is down here. We are oversold because there's your downward trend line and we were far below it, but the trend is down, and really it wouldn't surprise me at all if we hit that low point. On the long-term chart for the TSX, there is our trend line. We broke that a number of weeks ago. We have now formed that falling top. We've broken down from a flag pattern that points to the Canadian market moving lower. Now, we'll find some horizontal support right in that range there. So that's not a lot of downside till it gets to that horizontal support. And I think it will hold unless the U.S. stock market breaks its long-term upward trend. So there's a very good chance that if the U.S. stock market breaks that upward trend line, the Canadian market is also going to break, and we're going to go into a further correction in Canadian stocks. And therefore, a good deal of caution is warranted right now. Looking at the TSX Venture, it's fairly stable. Again, those small cap stocks not in as tough a shape as the large caps because they simply haven't gone up as much. But we have broken down from that pennant pattern on Thursday and Friday, and therefore I think the bias is likely to the downside. Treasuries have held support. We've talked about that a number of weeks, and this could be a little bit of a saving grace for the stock market near term because we do have that support holding. That means interest rates are actually going down as the price of bonds goes up, and with interest rates lower, that should be supportive for the market, but I don't know if it's going to be enough to overcome some of the trade war fears that are gripping the market right now. US dollar still in that downward trend. We've talked about this many weeks now. There's that downward trend line for the US dollar. Until it can break it from a rising bottom, I have to think that this market for the US dollar is likely to go lower. And the gold chart, which of course will benefit if the US dollar goes lower, with some flight to safety trading on the later part of this week. We've got that optimistic pattern that I've talked about a number of weeks now. We haven't broken out of it yet, but it won't take much more for it to get through that. There's your sort of upward, or pardon me, downward sloping trend line, and we're right at that. So we could see a breakout for gold near term, but until it happens, I would still be patient with gold. Where I think that there is some bullish trend is in the market for oil. We had a little bit of a pullback, and we've now broken that pullback. We're back in the upward trend with the flag break this week, and that points to higher prices for oil near term, and that will be helped if the US dollar weakens even more. Finally, the fear chart. We were slowly seeing fear come back to normal, but it picked up again on Thursday and Friday, breaking us out of this little descending triangle pattern, and that points to higher prices for the VIX as well. This is a good thing to trade if we get a correction. This goes up very nicely when the market is going down. So my ratings then, I'm still at neutral for US and Canadian stocks long term, but we could easily be bearish on this because we are right at that long-term upward trend line, and that could get broken next week. So we want to watch that very carefully. If we get the bounce back, then we'll stick with neutral until we can break the bearish short-term trend that we are in. Gold neutral on both time frames, but it is building that optimistic pattern, and oil bullish on both time frames as it is back in the upward trend. Stocks have now made a sharp downward move from a falling top that is threatening to break the long-term upward trend line going back many years. Further weakness will be a break of that trend line and a strong sign of an upward trend line, a trend reversal, given that falling top that is formed going into it. Oil is trending up and gold may break soon. Fear is rising. Let's take a look at a trade that I did on Thursday, and this just demonstrates two things. One, that when the market is correcting, something like the VIX is a good way to profit from that. It went up nicely through the day. The second thing is I go into every trade with a plan of where I'm going to get out of a trade and when I'm going to sell it at a profitable exit as well. And in this particular case, this one was a little difficult to watch because it, first of all, there was my entry signal at the action candle break. But for most of the day, it didn't do much. It went up, I was profitable, it went down, I lost all the profit that I had on the table. But my plan did not give me a reason to exit this trade. And I was rewarded for following my plan by holding it into the close and ended up with not a huge profit, but something decent. But most importantly, I planned the trade and I traded the plan. And that ultimately led to a profit when it could easily have been a loss. Well, that has been the Stock Scores Market Minutes for March 26, 2018. Subscribe to the Stock Scores YouTube channel, hit that like button, and most importantly, trade well.